This impacts every Australian's retirement. Treasurer Jim Chalmers is changing the superannuation taxes that he took to the last election. In this video, I'm going to talk you through what those changes are and then share my views of how these changes could impact your future, how it works. Superannuation is a tax haven. Money that is sent into your superannuation fund is taxed at 15% on the way in. Once that money is within your fund, it then gets invested, and then any profits that are made on those investments are also taxed at 15%. What Labor took to the last election was for superannuation balances above $3 million, which was about 90,000 Australians, that the profits that those superannuation balances create would instead be taxed at 30% rather than 15%. And they were also going to change how that profit was calculated by including something called unrealized gains. And this $3 million superannuation balance threshold would not be changed. It would not be indexed to inflation. Naturally, this would include and would capture more Australians each and every year. Now, I've done a full video on this explaining the initial proposal, which I'll leave a link in the description below. So, what's changing? The first change is that the $3 million superannuation balance threshold will now be indexed to inflation. This means it will capture less Aussies in the future and will raise less taxes than it was initially projected to do. The second change is that they will be removing unrealized gains from that profit calculation that will be subject to the new tax. And the final change is that they're going to introduce a new threshold, a $10 million threshold. For superannuation balances above this threshold, their profits will be taxed at 40%. Now, this only targets around 8,000 Australians. It doesn't target too many. However, it kills the logic of having any superannuation balances above $10 million because 40% is much higher than, say, the company tax rate, which is 30%. And here are my thoughts. So it is really, really horrible. I think it is really horrible that our personal income tax system does not include indexation on our tax rates. What this means is that as you grow income, generally speaking, most Aussies get a pay rise of at least the inflation value each year. As you continue to get pay rises, if the tax rates never move, it's called bracket creep, and you get pushed and pushed into higher tax brackets. You then have to wait and rely on a government coming and amending the tax rates, which only happens every so often, doesn't happen every year at all. So I think it's horrible that our personal tax system does not include indexation, and I'm really happy that this new superannuation measure now does include indexation, because that will limit the amount of Aussies, that will limit the amount of people that are captured by this new tax. Next, I want to talk about unrealized gains. So there are very, very few areas of tax law, almost no areas of tax law, unless you're a big bank, that taxes unrealized gains. Generally speaking, tax follows a cash basis, meaning say you have an investment property and you sell that investment property, you receive the cash from that property, you have realized that gain. So because you have the cash, it then makes sense to tax at that point. However, if you were to tax unrealized gains, using that same example, if you held an investment property and it just went up in value and you hadn't sold it, that's technically an unrealized gain. It's gone up in value, you haven't sold it, you have not realized the gain. This measure would have taxed that unrealized gain. So if you didn't have the cash, you would have had to try and borrow the cash just to pay the taxes. And then later on, if the investment property went down in value, you can't claim a deduction for that. And you can't claim a refund of the prior amount of tax that you've already paid. You have to carry forward this capital loss or this unrealized loss for future periods to offset against a future capital gain. And I just think that's a really silly idea. Now, whether you're rich or whether you're poor, my personal view is that Australians pay far too much tax. Our small little island is included in some of the highest tax rates in the world. So I'm generally never in favour of increasing the taxes on Australians regardless of your financial circumstances. This was a cash grab in my mind, and it's purely a cash grab to cover the massive levels of public spending that the government is doing, as well as reduce the ever-growing size of our national debt. So that's my long-winded way of saying I was very happy that unrealized gains was removed from the calculation of profit. Now, I can't finish this video without recognizing that there is an argument that superannuation, the superannuation environment, is primarily for retirement. It shouldn't be an environment for you to build up mass levels of wealth or to hide assets. So, although I don't really like it, I can sort of live with an increase in the tax rate from 15% to 30% on really high superannuation balances. 30% is still better than your personal marginal tax rates, which is as high as 40%, and it's in line with the company tax rate. So all in all, I was very glad that indexation is now included in that $3 million superannuation balance, and I'm glad that unrealized gains was removed from the calculation with the hope that this tax should target fewer and fewer Australians. Now, one good benefit come from this is that the LISTO will be increased, which is the low income super tax offset. Basically, if you earn less than $37,000 a year, the government will contribute $500 into your superannuation account. This threshold will be increased to people earning less than $45,000 a year, and the contribution will be increased to $810. So that will impact about 1 million Australians. You don't need to do anything to apply for this. Just make sure your superannuation account has your tax file number, and this will be then all completed automatically for you once you lodge your tax return. And excluding the LISTO, all these changes will take effect 1 year from 1 July 2026. If you got some value out of this video, hit that subscribe button so you don't miss any other financial content from me. And I'd love to hear what you think. Let me know in the comments below what you think about these new superannuation changes. I'm Tomo. Thanks for stopping in. See you in the next video.